All right, we are back. Welcome, everybody. This is week 5 of the 12-week curriculum that I'm pushing out for YouTube. The title of this presentation is going to be called How I Use Candle Ranges to Stay Ahead on NQ. Now, I want to give expectations for the following weeks. Weeks 5, this video, all the way to week 9 is going to be all about, execution, theory, things that I intend to trade or have traded nonetheless. So this is going to be all about that. Phase 1 of this curriculum was all about like my bread and butter, what makes the wheel spin, and ultimately it promotes the whole idea that discretion is what makes you successful, right? Anyway, so moving forward. I gotta click the slide and then cool. Intro. So since the week before, just like the last week, most traders called it chop, I called it structure. While everyone expected NQ to break down, like including myself. Like I thought, you know what, we had that inside week, the consolidation was there. Now all I'm going to be looking for is pretty much shorts. It should be a clean sell side, sell move. But nonetheless, like what stopped me from assuming the same early in the week, and in this case it was Monday, was the candle ranges, and I'll explain why. Because that kept me level-headed with my bias. Like that same range could have kept me with the shorts, but I'll explain. The odds were mechanically in the bear's favor. Again, remember, in that candle range, we were in the premium of the range. Not only that, there were still some things that needed to be taken, but nonetheless, like I still paid attention, keep my head on the swivel. And, the things that changed the narrative for, beginning of the week was discretion. Week 2, as I mentioned before, week 2 was about candle ranges. I did compare it to market structure, but it was mainly a candle range video, which defined acceptance and rejection levels. And then in week 3, we tied that logic to the market structure. All right, so that is my compass of direction. And you can argue that one's before the other. To me personally, I don't care. It's like the things I use for the prior week and the week before might not be the same orientation, but nonetheless, it's what's in my hands for that time. What's in my hands for that opportunity? It doesn't have to be every check in the box, as long as like certain things work and fulfill in that time frame manner. Yeah, there you have it. I'm ready to go. This week I'll show you how I applied the same framework on NQ, and even when their sentiment leaned bearish. But anyway, recap on the candle ranges and market structure. So again, remember, you can click the video that I made, but basically each candle's high and low creates the boundary. So again, this is the candle range where price failed to, of that time frame, failed to close above or below. So it's going to be that range, right? So in this case, we're still using that that Friday candle / that week candle where like you had that entire range. And then, so if price showed acceptance, what does that equal is like the candle body of that given time frame. You're going to want to see a candle closure above or below that range. So then that would ideally shift you to the next line of direction. And you can always feel free, like I do this all the time, is like I'll keep the prior range in like, in a subjective manner and just play the current immediate structure and then see if we revert back into it. Yeah, those are like one of my favorite plays, is when there's a deviation, and a lot of people think, oh, we're just revisiting and all that stuff, but nonetheless, like it's just a way of what the market gives, right? And the rejection is basically quite simple, like just like how I have my my MS highs and lows, like and then you have a SFP and you stay in that range. Same thing with this. Like if we fail to just simply close above or below, we remain range bound. That's the whole point of the candle ranges itself. The market structure gives those ranges purpose, so it helps develop discretion, identifying the draw on liquidity and then guiding when to execute within or against the range / trend, right? So this is a H1 chart. I wanted to show a clear detail of like the past days for the initial week that happened after that big drop. Nonetheless, like it just shows like after a large expansion, one of two things happen, right? You have a continuation, or like just consolidation and then a continuation, or an expansion to the opposing side. Regardless, like we had pretty much an inside week, right? So I'll still treat, the game plan was to still treat the range as a range. Like I'm just gonna keep it level to level. Yes, we are in the premium of this, but like that's not enough for me to consider shorts, right? So in fact, also there's something else that opened a queue for me to entertain longs. So I want to point that out real quick. Let me go back. I have the trading view right here, even though I have charts open on the presentation. I just want to show this real quick. Here, I already updated my weekly range, but like this was the range I'm talking about, right? As you if you're following along, this was that range I was playing with last week too. This down move, in fact, tested the discount version portion of this market structure range. Okay, so yeah, we filled the fair value gap. There's an order block here, old SR level here. It doesn't matter to me how deep in the discount it is. To me personally, it's just like, hey, we already made a visit down there. So what can happen? One of two things, like, you know, what would break this structure on the week would be a close below here. So all that can happen, this could be the potential floor, right? So for me, it's like what can happen next is we can either have one more move down or we could have an inside week. And case in point, we had an inside week. But for me, it's like, all right, cool. Maybe this low doesn't get tested. I don't really care. That's all that matters. That was my compass. So that was the cue for me to, like, you know, play longs and like have a small entertainment for it. I'm gonna go back and show the dailies, right? Because again, look at this, inside sweep after sweep after sweep. But yeah, so I'm gonna keep it at the H1 and get back to the presentation itself. But nonetheless, like here, what I got for you guys is like, again, this gap here, this is actually the H4 FEG, the remainder of it. And then what's below it is pretty much what's the start of it was the previous week's high, which again, when I'm expecting the business to be bearish, like look at this, high taken over here, high taken over here. And then what I wanted to expect was like, dude, this London high move, if it were to like, you know, tap into that, yo, I'd like it a lot more. It doesn't matter if there was a remainder of the gap fill. For me personally, it's like, okay, that's considered a high time frame level. It got swept. We had what we saw today, that day on Monday. Then I'd be a lot more privy to shorts, right? Again, back to this, I also have London high, Asia low. The gap is down here. Quarter 4 open, weekly open, which is also the daily open for Monday, right? And then again, previous week slows down there too. But let me move forward, go here. I have my framework set up. So I chose the M5 chart for this because it looks super clean. Yes, you can see it on the H1 that there in fact was a MSB here, but let's get to it. Okay, so basically what I had marked was like there was an M5 breaker here that delivered the London high. And then once we close below, now all I know is this, my rule of thumb, there was a retest to some degree, but like there's prices delivering to the downside and eventually it will rebalance, right? So I had to take a look to the left to see what I have. So obviously weekly open has been the level what I'm watching because the week's just started. The power 3 is going to start. The daily open's commencing, you know, same jazz. The expansion to whatever side it's going to go to, it's going to happen. So ideally I wanted to see a test of these highs here and then go down. And then if we are to like, you know, basically, reclaim certain areas, if anything, I don't really care about the what the price action is. Like for me, I just want to see some motion into weekly open. I want to see some acceptance above to entertain that we're going to screw this breaker up. And so then we can move upward and target these highs here. Nonetheless, if we are to reject, then yo, whether this rejection happened first or this just continued lower, this would have been a very clean self profile to attempt to trade on. Nonetheless, like, you know, because H's low is here, H4 gap is here. This weekly opening gap was here, but like for me, I don't really trade those. I just put into context with like whatever framework I have. But anyway, like it already got filled, but then eventually you see like it rebalanced into it, and then like we went up. So when I see stuff like this, what did I have to pay attention to? Because clearly I wasn't down here when I was planning on taking trades. I think it was either Monday or Wednesday where I had a long scalp here before the freaking outage happened. It had to be Monday because the AWS outage happened on Monday and I couldn't trade stop step. Whatever. Anyway, you got the gap fill here. Cool. We broke structure. It's delivering downward, right? So again, the following hour we went up and we're still in that bearish, like, you know, test area, but like, hey, we had a bullish close above weekly open. Now in this, what I was taking a peep at was, and in fact I do want to show the trading view to explain it more because this is PowerPoint and I'm like, frick, I should have added more pictures. But nonetheless, this was my line of business, this high here that caused this low. Because like here, like look, this is the high that where market would break structure if it were to close above. And also this in fact was the M5 high, right? Which it reacted well off this bearish parameter and then it went down. But like it was very like, you know, like lopsided, very shortcoming, very underwhelming. And then the M5 was very clear, right? So this high here, we break above, have a retest, then move up. Nonetheless, like here there were okay, so I do have a low time frame example. Yeah, so here like you can already have preempted areas to take trades on for longs. You know, you had the inversion here to fill. I think I took just a scalp over here, but I'm pretty sure because like the framework for I think it was Wednesday and Monday were very identical. I honestly can't remember, but I chose Monday for the sake of like delivery itself. It was very clean. It was in fact something I was looking to trade. When the New York Open happened, literally the AWS joint just went off. Like I thought it was just free. So it's the whole provider for Top Step. But nonetheless, like you got the delivery here and went up and took out the areas of interest. But that was pretty much it, I think, for this video. And then like I have a whole application slide of this, so we'll get to it really quick. The application to all this, right? So again, as I explained through the process of the charts, I mean the slides, pre-market began showing bearish behavior after the M15/M5 breaker that formed London's high, but the pre-London move hadn't cleared any major point of interest. That was also another cue on like, hey, maybe we are to look for long. So I just opened that up as a point of interest and see where we can go from there. So anyway, so price then delivered into the weekly/daily open, balancing from the previous weekly opening gap. From there, I wanted the C and MSB to happen on the M15/M5 high to confirm a shift. So I was a little more conservative on that side because there are some things that I know of that I could have took a trade on, but like it's just more, it's a little bit more preemptive, you know? Because yeah, anyway. That would be my validation for longs, you know, and I love that type of stuff because here's the thing. So the same level also acted as a line of sand for the bearish narrative. Okay, so we got the M15/M5 breaker there right as price attempted to reclaim the weekly daily open. That part of the framework, the best part of the framework was that the market had very little room to hide its hand or to show its hand, and validation was very clearly clearly defined. So that's what I mean. Like I like those kind of setups because it's like, you know what, it's so easy to cut the switch and go with the opposing direction versus to the other way around. So like for me, it's like, you know, that enhances the execution psychology, the whole discretionary part to it, because at the end of the day, you're like, but we're at premium, but this is happening, but this is happening, you know, like, no, dude, when you start to see certain things occur, like at the very least, just don't trade, you know, just watch it. And then you're going to start to see it happen again and again. And you're going to be like, yo, cool. I can be cold like that too. And I can switch it up. My mentors do it all the time. They're like, when I would be sidelined, I'd watch and I'd be like, damn, that's all it took. That's all it took. All because I had like my goggles on. That's all it took. Anyway, so finally, following that, the displacement into the breaker, once I'm starting to see large expansion candles on that lower time frame, you know, post MSB, that was my time to execute. But again, Monday came and then the freaking thing just wouldn't let me trade. But nonetheless, outro is, as always, you'll see me post my full TA into the Discord. Share what you got developing, you know, whatever you got cooking up. You know, don't feel, when you join, don't feel free to be, you know, shy. I'm going to welcome you. I got people in there that do post charts from time to time. Don't hesitate to ask questions though, for real. Like, don't feel dumb. Like, there's no such thing. Like, at the end of the day, the first step is to understand market structure. The second step is to like understand why it failed or why it succeeded and what could make it fail. Because I'll tell you this, like, I've seen a lot of failed setups that I would have initially taken, but like, you know, again, if it didn't work a certain way, I wouldn't have made that switch. Anyways, the more contacts you build, the more market structure starts to make sense. But that's pretty much it with this presentation. And yeah. All right, guys, take care.